What's up, ladies and gentlemen? Welcome to the Beat of Business with me, Ravi Wadan. Now, this video is going to be more of an open discussion around Bitcoin, where I share how I trade the cryptocurrency, what platform I use to trade, what's driving Bitcoin prices higher, and my thoughts surrounding Bitcoin in general. Now, if you didn't know, Bitcoin has been on an absolute tear since October and is currently trading at around $54,000 and has surpassed a market value of $1 trillion. With the recent surge in Bitcoin, it has outperformed just about every asset on the planet. Anyways, as someone who loves emerging tech and finance, seeing this price action and disruption to traditional finance has been one of the best stories of my career. Now, whether you are on board with Bitcoin or not, I think that we can all agree that it's here to stay in some form or another. Now, I'm not saying that it's going to be the reserve currency of the planet, but I do think it's going to alter the way reserve banks around the world view their fiscal policy and fiscal structure, and in some cases, it already has. And one thing I do want to make clear before we move forward is this misconception that you have to have $52,000 or $53,000 to buy Bitcoin or add it to your portfolio. This just isn't true. You can buy fractional Bitcoins, also known as Satoshis, at the dollar amount of your choosing. You can think of these Satoshis as a couple of cents or a penny in US currency. So if you want to buy $50 worth or $100 worth or $400 worth or $5,000 worth of Bitcoin, you can do that. You don't need to have $50,000 or more to get exposure to Bitcoin. I just wanted to make sure I clear that up because I hear a lot of people saying, I don't have 50 grand laying around to buy Bitcoin. Or they say, I can't afford Bitcoin, it's too expensive. So I just wanted to put that out there for those of you that didn't know that you can buy 10, 20, 50, or even $100 worth of Bitcoin if you wanted. If you are curious, I use Coinbase for my crypto transactions, but I know you can use other platforms like Robinhood, Cash App, eToro, and there's a bunch more out there. Now, I can't speak to the performance of other platforms, but I've been using Coinbase for almost 4 years, and I've been pretty happy with it. But then again, I'm not actually trading crypto, meaning I'm not placing numerous buys and sells every day. Currently, I buy and sell crypto about 3 to 5 times a month, and Coinbase has been just fine for my particular use case. Now, before I forget, don't forget to hit that like button for the YouTube algorithm, and please subscribe to my channel. If you've missed any of my past videos, you can go to my YouTube channel, or you can go straight to my website, thebeatofbusiness.com. In terms of what's attributing to Bitcoin's meteoric rise, well, I would say it's due to 3 key market participants. We have the speculators, we have the corporate treasurers, and then we have the institutional investors. In general, we can say that each one of these participants have in some way, shape, or form contributed to Bitcoin's meteoric rise. So on one hand, we have the crypto bulls who are either all in or just see it as a great portfolio diversifier. On the other hand, we have the crypto bears who have been skeptical since the start and can't seem to wrap their head around a digital currency. Now, these crypto believers are dueling with the crypto skeptics as to what is fueling the massive climb in price. The believers see it as an asset being embraced for its ability to hedge risks, such as inflation, while the skeptics sense it as a dangerous craze being driven by waves of monetary and fiscal stimulus. Personally, I also think there's a bit of FOMO, or fear of missing out, driving this rally. You generally tend to see this anytime asset prices increase drastically and start getting international attention. Investors who up until now have been on the sidelines are now the same investors who don't want to miss out on the party. So even though they know nothing about crypto or the blockchain, they go out and buy it because their buddies are making all of this money and bragging about it on the golf course. This person is what I like to call the FOMO investor, and when you have millions of FOMO dollars pouring into the market, it will typically drive asset prices higher. Now, the FOMO effect isn't isolated to Bitcoin. You will see this in the stock market, and you are seeing a little bit of this in the real estate market right now. In terms of real estate, People see the low interest rates, and people see their friends and family buying homes, and psychologically, people somehow think they're going to miss out on their buying opportunity. Now, whether they are right or wrong, I'm not sure, but that's my definition of the FOMO investor. So recently, there have been some major breakthroughs surrounding Bitcoin. Most notably, Elon Musk and Tesla bought $1.5 billion worth of Bitcoin and plan to accept it as payment. And over the past few weeks, we've seen numerous other institutional investors and governments starting to embrace the cryptocurrency more than ever. I mean, even the oldest bank in the United States, the Bank of New York Mellon, announced earlier this month that it was moving into the crypto space. And just to be clear, Bank of New York Mellon is not some young, hot fintech startup. This is the oldest bank in the country. If they were a person, they'd be your grandpa. And if your grandpa and all of his buddies, aka the largest and oldest financial institutions in America, are moving into the crypto space, that should tell you something. At this point, Bitcoin is starting to get so big that it arguably creates its own demand. Only a few months ago, many of the biggest names in finance were saying they wouldn't touch it. But now many of those same people and institutions are buying in as its credibility increases with each major price barrier it breaks. The coming weeks and months are going to be extremely fascinating to watch. I personally think that the momentum is just getting started as we see the old guard move into the cryptocurrency space. I'm under the impression that we are likely witnessing the birth of a new financial and internet ecosystem. Unlike the existing financial ecosystem, Bitcoin is scarce, it's fungible, it's divisible, and it's portable. Not only that, Bitcoin is being used as a hedge against inflation and currency devaluation. So as long as the federal governments keep committing to stimulus, retail and institutional investors are going to keep allocating money to Bitcoin. You see, unlike fiat currencies like the US dollar or the British pound or the Japanese yen, there is a fixed supply to Bitcoin. That means you can't just create more of it and dilute the existing supply. Now let's try to simplify this. Let's say that there is only $100 in the entire United States in circulation. And let's say that I have 10 of those dollars in my pocket. So in essence, I own 10% of the total money supply in the entire country. Now let's say the US government comes out tomorrow and says they are increasing the total amount of money in circulation from $100 to $1,000. Now the $10 in my pocket no longer account for 10% of all of the money in circulation, it only accounts for 1% of all of the money in circulation. Now this is a drastic example of inflation and currency devaluation, but this is essentially what is happening with all of the stimulus being injected into the system. Now people are worried that their existing dollars will depreciate, and now they're looking to buy other assets that won't lose their value. For generations, that asset has been gold, and now you are seeing Bitcoin being considered a viable alternative by many investors. The moral of the story is that if you haven't bought Bitcoin yet, you should do some research and strongly consider it for your portfolio. Many economists and research analysts have price targets of well over $100,000. Personally, my view on disruptive innovation is that I would rather be a part of it than not be a part of it. What I mean by that is I don't mind allocating a small portion of my portfolio to something that has enormous upside potential. If I were to imagine myself 30 to 40 years from now, I think I would be pretty upset with myself if I didn't invest in Bitcoin, the blockchain, and crypto in general. Regardless of what happens to the price, I would regret not being a part of something historical. I mean, disruptions like this only happen a handful of times over the course of 10 to 20 years, and I don't want to watch it from the sidelines. Irrespective of your views, I don't think anybody can discount the fact that there is sort of a revolution happening right now. It's going to be a bumpy ride, and there are still a lot of unanswered questions, but with this level of adoption and the type of people and institutions adopting it, I have no doubt that crypto and Bitcoin are here to stay. Thank you for watching this video, and as always, I hope you learned something new. If you haven't already, please go ahead and like this video and subscribe to my YouTube channel if you like content like this. Thank you.